Hey guys, this is Forte, and the trade that we're looking at today is GTE energy stock. Energy stock is the hottest thing. Let's take a look at before we go through. Let's look at the sectors. This is the basic material sector. This is the industrial sector. This is the tech sector, consumer. These you see all the sectors. This one looks pretty good. It's the financial sector, which is looking fine, right? And then the real estate sector and the consumer defense sector, the healthcare sector, the utilities sector, which looks okay. I don't like to trade utility because they're moving. They're slow movers usually, and the communication service sector. And then here we have the freaking energy sector, who is looking to make basically what is it all-time highs right here. And if this is the sector that's going, this is where we gotta pay attention to. Even though I hate trading energy, and the idea I want to give you guys is a wrong one. GTE. Whoops, I have to do something real quick. Delete my Twitter. Okay. GTE. It's a penny stock. We're below. It's less than $1. Literally penny stock, right? Not literally, but hey, we're getting close to $1 value, which is number one. It's a crucial point. We got rejected twice right there. It's our third time going at it. Perhaps this time we break it, and then this thing just booms. But that's not what I'm looking at. What I'm looking at is I'm not here to find these $1 area of where stock might get going. That's one thing I look at. But if that's the only thing I look at, most likely I'm going to be losing money in the long run, right? Because stocks don't work that easily nowadays. Number one, when it comes to energy sector, I'm actually careful with even with doing technical analysis. I do a little bit of fundamental. So let's number one start with the technical analysis. The stock, obviously, how many $3 stock, $89 stock, whatever. So you can see that on the technical side, you can see that there's a lot of overhead supply, right? But here's the thing: all the overhead supply is non-existent because if you take a look at it, from what is it? Basically 2014 to 2020, or let's take a look at a short term from the later half of the 2018 to the beginning to the first quarter of 2020. The stock got absolutely demolished, right? It got to a point where one share of this thing was worth 18 cents, right? That's how low it got. People sold. You can see that at the very last 4 weeks, there was gap, big red candles on the weekly candles. Everybody sold out. Everybody thought this was over. This stock is done. And then the stock started accumulating a little bit, distribution, and then it got going, and then we started this long term consolidation for an entire year, right? Now that's the beauty. It's about actually just about a year of consolidation. It's a good number, a year, right? And then that's number one. That's that. It's just a little bonus thing. Number two, we look at the weekly moving averages, right? The 10-week, 20, 40, 30-week moving average are on the uptrend. So that tells me that the stock is getting ready to give another chance to the upside. And with the earlier analysis to talk about with the supply and demand, checking out supplies, the supplies are their supplies are gone. These are, in my opinion, they don't exist because the stock has gone that low of a point. So I don't really see much supply left in the stock, right? Now if we drill down to the daily, right? The stock, if you look at it from a swing trade perspective, it's a little bit extended. If you look at it from a position trade perspective, it's not that overextended at all. And then matter of fact, that's what I'm trying to nail on this thing. Number one, I'm trying to swing trade this, but I'm looking at how a position trader will look at it because that is where the big monies come in. Big banks, hedge funds, big monies, they don't come in and buy today and get, just call it that. They do that, but they usually scale in, buy stocks in multiple days. These charts is, it's made up by the market maker, But what I'm trying to say is, so from looking at this chart psychologically, I'm trying to understand what would a position trader try to do. A position trader right now would be trying to build a position in this thing because number one, the energy stocks are hot. This stock, especially, is on an uptrend. It's not overextended, such as a lot of stock like ExxonMobil, super extended. But the GTE is not that extended. So big monies basically will be trying to look at these stocks that hasn't got going yet. and it's a really cheap one. Trades plenty of volume. I think that is 5 million volumes, and we have earnings on the 23rd. So perhaps they're building position for the earnings. We don't know. We're swing traders. I'm not there for that. Right? I'll likely be out by then. Anyways, and that's what I'm looking at. Now, from a swing trade perspective, it's a little extended. The perfect entry would have been today, but I wasn't looking at it, right? And then the stock made, how many percent is this? Moved about 8% today. Energy also got going today. We're gonna put the view up right there. What I'm hoping to do to see in the stock is to see it, accumulate for a couple of days. And I like to see the price holding and then buy it above here. Or tomorrow, if this thing posts back, right? I'm gonna put the view up again. I'm gonna be looking at energy sectors and see how they move. If this thing pulls back and it got going, immediately picks up again, I'm gonna be like, okay, this thing just want to go. I'll be grabbing a position right here. And if I see anything go south, I'm gonna be out of it as fast as I can, because I'm not there to get in the wrong move at the wrong time or the right move at the wrong time. I'm trying to get in the right move at the right time. Okay. So now we're done with that. Let's take a look at the fundamentals, since I don't know if you guys care about that, but anyways, as we transition, you guys should try to put this TV on. Check out my, subscribe to my YouTube. Check description. For people, I do offer exact entries. If when I do offer a picture of them. I write all my trades in my notebook at the end of the day, and then I just trade them the next day, right? But some people wants more help. So I take a screenshot, I take a picture of it, and upload it to my YouTube community. But I don't want to do that for free. It's a lot of work. So if people are giving me money, then I'll gladly help them. But I don't want to take too much money from people, right? I don't want to start a service or anything. So YouTube members, $4.99, super cheap. If people are interested in those, I don't recommend it. I post these ideas on videos, Twitter for free. By the way, Twitter is twitter.com/fortecharts. Follow me on Twitter. Anyways, let's talk about the fundamentals in this thing. So if you take a look at the earnings for this main thing I look at pretty much is to see if they're making money or not. And right here you can see the actual revenue. It literally shows you right here. You can look at the EPS and anything. I don't really know how to read a lot of these. All I care about is if the company. In the end, these are companies, right? I just want to care if these companies are making money or not. That's all I care about. And how much money are they making, like compared to last year, right? Compared to the last quarter. So if we take a look at it, we just reported earning on the October 31st. Let me double check you guys can see it. Oh, you guys cannot see it. Sorry. Sorry. Let me figure this out. Oh, there you go. This is on Market Beat. This is my Twitter, twitter.com/fortecharts. This is on Market Beats, and free website, not sponsored by anything, by the way. I just find it because it's good to use. So right here it shows actual revenue. I just type in GTE right here, and then click on the earnings and scroll down. You get to see their EPS, the date it's they reported it, and then I don't care about their estimate. All I care about is the revenue, how much, if they're making money or not, right? And how much money they're making compared to previous quarter or the previous year, right? So if you look at it on previous year, we almost tripled previous year's revenue. If you look at last quarter, if you look at the last 2 quarters, they barely have much growth in the last 2 quarters, right? 3 quarters ago it was 64 million. The quarter right after that it bumped to 95, and then that was a huge add bonus. If we take a look at the chart here, charts are not instant reflection of these, by the way. And let's take a look at it. So on February 2021, February 24th, 2021, I think in this case it might have right here. So this is where they reported earning. It's obviously no, that was the wrong one. It's May 4th actually. May 4th is where they went from 64 million to 95 million. May 4th, go back right here. So that's the day where it reported earnings. Stock got going the very second day, and it kind of just got going again, and chop all the way to this day. Even undercut this right here. So even with good fundamentals, you shouldn't just buy it. Charting is where you try to, because in the end, what moves the price tomorrow is not fundamental, it's just buyers and sellers. So you want to use chart to see supply and demand, right? Oftentimes, I don't even actually 99% of the time I don't read fundamentals. All I do is technical reading, right? Because that's all that really matters to me. But for energy stocks, I sometimes do look at it just to see if they, if the stock is actually like gonna get going or it's bullshit. But this seems legit. They reported earning on October 31st. October 31st is this day right here. It got going. Very next day probably gapped, got going. Very next day fell, chop chop chop, got down because it encountered too many supplies around this area. And then now we slowly got up there, slow but steadily. And now the earnings starting to kick in, right? You could buy right here, right? Some people might argue, well, I'm a fundamental trader. I don't want to do technical. I'm gonna buy here because they have good fundamental and just hold, and then now look, we're the same. No, that's not how it works. Sometimes you buy right here with good fundamentals. Perhaps the market sucks, right? Market doesn't support it. This thing could just go south. Look at what happened back then. It has a potential to go to 18 cents. Do you want that to happen too? Number two is if you bought it right after earnings, right after it reported good earnings, you're like good fundamental, everything, blah blah blah. Look, you've wasted 3 months, 62 days of your money's life of doing that. That's like telling your soldier to go to the desert for 62 days. Come on. We don't do that. We're here to get in, get out. That's at least that's what I do. That I don't know if that's what you want to do. Anyways, that's it for the fundamental reading of it and combining with technical. That's how you see on this one trade, right? And that's about it. A little bit longer video today for a little educational purpose. If you guys do like these videos, tell me in the comment section. Any questions? Ask in the comment. Ask me on Twitter. Ask me on Discord. It's all been free. I don't do paid chat rooms. Okay, guys, I'm just chilling here, making YouTube fun. Anyways, have a good one. I'm fully covered from COVID, by the way.